We have three types of activities that we're going to be talking about. We can have operating activities, investing activities, and financing activities. Now, money can come into us from all three of those sources. Inflow is when money comes in. We can have money coming in from operating sources, from investing sources, from financing sources. And money can also go out for operating uses, for investing uses, and for financing uses. So for all three of those areas, we're going to have cash coming in and cash going out. Here's what a statement of cash flows would look like. Operating section first. We start with net income. We add some things, we subtract some things to get my cash flows from operating activities. Then we have the investing side. We're going to add some items, we're going to subtract some items. Then we're going to have the financing side. Some's coming in, some's going out. And finally, we'll add them all up to get my total cash flows for the period. This is targets. Just want to show you what it looked like. Notice the three sections I just told you about: operating, investing, and financing. Now, anytime you see a positive number, that means cash is coming in. Anytime you see a negative number, that means that cash is going out. So when cash comes in, we're going to add. When cash goes out, we're going to subtract. We have my operating total, my investing total, my financing total. If I add them together, overall, this will give me my change in cash. Now, a positive number tells me that more cash came in than went out. A negative number tells me that more cash went out than came in. So let's just look at the bottom line. This is a couple years back on target. 2007, 1,600 positive means what? More cash came in than went out. 2008 was not the best year. 2008, more cash went out than came in. And then back to 2009, more cash came in than went out. Okay? Bottom line. Operating activities relate to items that tie into net income on the income statement. Things which relate to revenues and expenses. In effect, we're going to take my income statement from its accrual basis and convert it back to a cash basis. The next section, investing. Buying and selling non-current assets. Really, we're talking buying and selling property, plant, and equipment is by far the bulk of this. So in the investing section, we're talking about any changes in property, plant, and equipment, non-current assets. In the financing section, we're going to talk about any time money comes in or goes out to owners or creditors, because they're the two folks who can finance our business. Now let's just think about that one while we get started. What's a way that money could come into me from my owner, in other words, from my stockholders? How can I receive money from my stockholders? If I issue stock, cash is going to come in. We'd see that'd be something we would add. What's a way that cash could go out to my stockholders? If I bought my stock back would be one. Very good. What's another? Paying dividends. So those would be outflows in the financing section. How about creditors like a bank? What's a way that cash could come into me from a creditor like a bank? If I borrowed money? But if I borrowed money at a bank, cash is going to come in, that would go in the financing section. What would make money go out to the bank from me if I did what? Paid it off? If I paid it off, cash is going to go down and I'm going to subtract. So we have money that can come in or go out from my owners or my creditors. That's going to go in the financing section. Any interest that we pay on that money that I borrow relates to interest expense. Anything that relates to my revenues and expenses like that goes back in the operating section. So who finances the company? Owners and creditors do. Anytime money comes in or goes out to owners or creditors, it's going to go to the financing section. There are a few kind of odd transactions that go at the very bottom of the statement that we would just disclose in the footnotes. For example, do you remember back in Chapter 11 when we bought a machine but we didn't pay cash for it, we gave them shares of my stock, $15,000? That is investing, because anytime I buy property, plant, and equipment, it is investing. But did cash get impacted? No. That is financing. Why? Because I issued stock. Issuing stock is a financing activity. But did cash come in? No. That would be one, and they're very small in number. Non-cash investing or financing activities I would disclose at the bottom of my statement. And why do we disclose them? Because they will impact my future cash flows. Again, here's old Walmart. Notice operating, investing, and financing that we talked about. Let's see if some of this makes a little bit more sense. Payments for property and equipment. When I buy property, plant, and equipment, notice these are all negative numbers, which means what? Cash is going out. How about the next one? Proceeds from disposal of property and equipment. In other words, I sold some property, plant, and equipment. Notice these are all positive numbers because when I sell something, cash is going to come in. How about down here under financing? Dividends paid. You'll notice those are all negative numbers. Why? Because cash is going out. Paying off some long-term debt. I owed money to the bank and I paid them off. Again, cash is going to go out.